Hello, Mark.
Hi, Tian. How are you?
Very well. How are you? Are you back in town in Singapore or still in the US?
Yep, back in Singapore.
I see. I see. How's everything?
It's great to be back. Also really nice to spend time on the west coast of the US. And sorry to miss you while you were in Singapore.
Yeah, but we got a very great chat with Adam.
Yeah,
Yeah, it's
good.
great. It's very early in the morning, but he make it to the M&S cafe, and it's remind me very much of London and the vibe of Europe. Yeah, thanks for arrangement. Yeah, and thanks for coming today also.
Happy to be here.
Yeah, thanks very much, Mark. And for the audiences, as you know, we have been we went through so many chapter of the 𝐸𝐇𝐀 within our community, the community of Vietnam Venture Capital community. We host these 𝐸𝐇𝐀 in terms of with the purpose of gaining more knowledge and also get more insight from the people in our ecosystem in venture investment. And this year the topic is about angel investing, and we are lucky, and I'm so pumped to have Mark Inkster from Asia Sustainability Angels, who devote most of his time and currently in green investment. And we really appreciate his time to be here today. And pass on to you, Mark.
Great. Well, I'm happy to be here as well. I'll pull up my I will pull up my deck. I cannot share screen, so I think I need the share screen permission if you'd like.
Sure. The stage yours.
Great. There we go. All right. So just to give you guys a little bit of a background about me personally. I'm an American from the West Coast. Spent the first half of my career in Silicon Valley working for a number of tech companies. I worked for Hewlett-Packard, was a consultant at Bain. The internet started to grow in the late 90s, and I was lucky enough to be in the Valley when that was happening. So I joined Yahoo, and my team was responsible for building all of Yahoo's websites outside the United States. So we built shopping.yahoo.Germany and finance.yahoo.Japan and sports.yahoo.Brazil. So traveled around the world building websites, and that was an exciting moment 20 plus years ago. And there was a saying back then that the internet changes everything, which I at least didn't fully understand. And here we are 20 plus years later, and it's amazing how the world's been transformed since then. I then moved to Asia around 2003, just a little less than 20 years ago, first in Korea, then China, and then finally Singapore, working for Yahoo, then eBay, then Microsoft. And I helped start a company here in Singapore recently called Beam Mobility, does electric scooters, stand-up L-shaped electric scooters. And about a year and a half ago, started up Asia Sustainability Angels. It's been an exciting ride so far. Let me just, here.
Sorry, Mark, can you make it widescreen? It's easier, like touch on the widescreen, please. Yeah.
All right, there we go. So you can see this okay? So Asia Sustainability Angels, we got going early last year with just a couple people. The idea is to invest at the intersection of economic return and environmental return. So if you had a 2x2, it would be the top right corner of that 2x2. Interestingly, it's not always easy to balance economic return and environmental return. So you don't always see a lot that's at the upper right corner of the upper right corner. You often see companies that do a pretty good job on the economics and an amazing job on the environment, or an amazing job on the economics and an okay job on the environment. And there's a kind of a spectrum in there in that top right box. So that's what we focus on. We write checks of 50 to 200K to companies that are operating in Southeast Asia or have a big part of their business in Southeast Asia, mostly based here, but they can be headquartered. The corporate structure can be anywhere in the world that has investor-friendly relations. And we're looking at energy transition, carbon markets, carbon sequestration, lots of work around food and ag tech and around new forms of mobility. So those kind of things that we're focused on. Our members individually put in 10 to 25 to 50K per deal, and we invest in each company. It's a different group of angels. So companies present to us, and then the interested investors get together and do the due diligence on those companies. So that's who Asia Sustainability Angels are. We're mostly from tech, investing, some consultants, some people with backgrounds in government, some people with backgrounds in nonprofits, one professor. So a nice mix of people, mostly based here in Singapore, but a few spread across Southeast Asia. So that's who we are. Tien had asked me to talk a little bit about some of the challenges in angel investing itself. And they're really no different from challenges of, for the most part, challenges of VC. They're similar. The first thing you need is to get a high quality deal flow. And if you're an individual angel, it's a lot of work. If you become part of a group, then you can kind of put your head together, put your deal flow together, and everybody has an idea at a different time. So we, now that we're up to 40 members, we get a lot more internal deal flow than when we were only 3 or 4 members just starting out. But that's what everybody, all investors want to see, as many great deals as they can to be able to choose from. Second challenge is we've decided to focus on Southeast Asia, but be pretty broad about the kinds of environmental challenges that we focus on, because there are, we really want to make sure we find great companies. So that great company could be in any of the areas that I highlighted before. And that means that we have to have some ability to evaluate and do due diligence on those companies. So it could be, we've looked at things as diverse as water filtration, energy generation, black soldier flies, various forms of ag tech, artificial intelligence, electric mobility. These things are really different from each other. And some of them, we're looking at one now that has to do with some deep tech on lab-grown food. And that's not an area where I personally have expertise. In a lot of these areas, I don't have expertise. So figuring out how are you going to intelligently evaluate the deals when you don't necessarily have a lot of personal expertise is a challenge for any investor, and especially for an angel. Running a group of angels can also be hard because angels are busy people. These are successful executives in our group who bring a lot to the table, but they also have complicated schedules of their own. So keeping a group of busy people focused and engaged and really finding good deals, evaluating deals, and then helping the companies that we invest in takes a fair amount of work. And one of the ways we keep all of this going is by partnering across the ecosystem. So it's always exciting to talk to groups like yours, where we can sort of share insights, and I get a lot from these kinds of conversations as well, and I find it very important to partner. You'd asked about what we look for when companies pitch to us. Because we look at both business returns and environmental returns, it's super important not only to get the normal business stuff across, but also to make sure that you get the environmental piece across as well. The business returns, the kinds of things we look at for business returns, I think are similar to a lot of different investors. We invest so early that a lot comes down to the team. We really have to believe that the people we're backing, the CEO and the team around the CEO, are strong, are going to get things done, are going to focus appropriately, and at the end of the day, deliver a great leap forward in the years ahead for future rounds of investing. It's hard to know if the idea is going to stay the same. There can be pivots, but the team has to be there to start with. And then the idea has to be strong and in an area with a big addressable market, a big TAM, and a decent business model. So you've got a good team going after a big market with a strong business model. That's kind of the fundamental for any investor. And then is the company differentiated, and do they have sort of sustainable differentiation built into the strategy? What's the traction been like so far? What other kinds of investors have liked this? There is some degree of comfort that investors find in being in the company of other investors whom they trust. And so understanding who's in, who's not in, who you've brought with you, who you've managed to attract is also an interesting thing. So those are all the classic things that any other investor who's not looking at sustainability would be looking at, and we look at the same. And you have to tick those boxes. Separately, it's important and critical to tick the box of, are you actually doing something good for the world? And the most important, one really important thing is the environmental benefit central to your business? There are some businesses that if they succeed, they can do something good for the environment. And there are others that just by virtue of their succeeding, it means that something good is happening to the environment. So in e-scooters, the company that I helped start, if people get out of their cars and start using e-scooters, each trip has a much smaller environmental footprint. So just by nature of going from 10 million to $100 million of revenue, that means a lot of people are getting out of their cars and getting onto scooters. Now, some people are getting rid of walks, but most part is the environmental benefit comes from the time. So that kind of embedded return is something that, if you have it, is important to get across, or finding ways to show how central this is to your business and to the success of your business. It also needs to be measurable. It can't be just something you talk about. So I would want to see that when we talk to you in the future, you're saying, here's what we've done, and preferably with clear data and some nice metric of doing it. And it's got to be big enough. It actually has to be impactful. If someone's going to make changes around the edges, that's great, but it's not necessarily something that we, as a climate-focused angel investment group, want to be investing in. We want to make sure that we save our money and put it into the ideas that we think will have the biggest impact. And kind of behind all that is the notion that we believe the tools of entrepreneurship are powerful and are some of the biggest agents that can drive change in the world. And it's important to use those tools to solve really big problems. So we want to see that entrepreneurs are indeed doing that. So the business side is I'm using the tools, and the environmental side is and it's focused on the important problem. And lastly, before sort of moving into the conversation and the Q&A, just some of the things I'm observing. First of all, I've been doing this for a couple of years, but was keeping my eye open for the years before that. And I'm also a member of an angel group in the United States that's been around for 15, 20 years. And what I'm seeing is a growing number and growing sophistication of startups that are focused on climate tech. And that's really exciting. Kind of along with that is when I compare, as I'm also part of the third angel group, which focuses purely on tech, not just on climate tech. And when I compare the founders, oftentimes the people going into climate tech have a couple of tech startup experiences already, and a number of them with exits. And they've said, good, I've done that. I've learned a lot through working in a tech startup. And now I'm going to apply that learning to climate tech. Now, not always. Some of the people we talk to are fresh out of school. This is one of the early things they're doing in their career. But I've been a little bit surprised at the number of people who have gotten to this a bit later in life and are looking to find some some source of meaning as well as the economic return. And I think for a lot of these people who've had successful exits, the meaning is every bit as important as the financial return. So along with that then means that the companies tend to be mission driven. If the whole point is to solve an important problem for the world, then you want to make sure that you're indeed focusing the whole company on that problem. It's tough. It's tough for the CEO or for the founding team because there's always a balancing act. It's like, yeah, I can do this thing that would help the environment more, but it's expensive. And we need to make sure we are making enough money to stay sustainable as a business and provide returns for our shareholders and to grow and to demonstrate that we're viable as a business. Those tensions are very real, but at the core, the mission is central. Another trend I'm seeing as I look across companies is the tech component is good. And it's not just the technology itself. So we see people doing a lot with AI. We're seeing blockchain used in various ways. But it's also the operating style. So lean startup or hard thing about hard things, the kind of books that founders read and learn, hey, this is how you do test and learn. This is hypothesis-driven business building. Here's what I want for my seed stage, my Series A stage, my Series B stage. All those kind of ways of thinking and ways of operating are making their way very much to climate tech startups, especially with some of the experienced founders who are coming in. Some of the founders who don't have experience can then look to people like me or other angels and investors and advisors who have been around the block and seen that applied in tech startups and can teach them how to learn the lessons from tech startups to climate tech startups. And then I'd say as a last point, when I started talking to people about Asia Sustainability Angels around 2 years ago, a lot of the VCs I was talking to had very little interest in anything impact oriented, or they would talk about ESG, but many of the investors I spoke to felt it was more of a burden than something to lean into. And now, as I talk to investors, I see a lot of interest in investing in climate tech. And I'm guessing that a lot of that is driven by their investors, by the limited partners who invested in the VCs who want to see the change happen. And that's a net positive for the ecosystem, because if there's more interest up and down from seed stage to late stage investors, and even all the way into private equity investors, and if it's genuine, then I think that creates a great pipeline to fill for angel investors and early stage investors. So with that, I'll end the presentation and open myself to questions.
Thanks, Mark. I think it's a brilliant, and also I think it's very straightforward and right from your insight, and also the time that you managed the ASA. I think it's a lot of lesson we got here, and also the train that you point out. We do see that there's the rise of purposeful investors. And people got the purpose when invest, not only about profits like before, right? And we also recognize that there's a lot of things that we indirectly have done through our investment, I must say, including the pandemic. So I must say that it's a time for be more careful and more dynamic and more creative in terms of invest, and especially in our case in venture investment. Thanks very much for those points. And hey guys, if you have any questions, please just tie on the box chat, and we also can bring you in, and you can open that camera to interact with us. We really want some human being to interact with us very soon. And I have one question, Mark, and in terms of the DD process, like so it's like you present the deals to the group of 40 angels, and anyone who interested in the deals will jump in and they will analyze and DD by themselves with their own format or with any guidelines that you provide as ASA?
So if we have, say, 5 or 6 people who are interested in a given deal, we try to make sure that at least one of them has expertise in the industry, right? So if it's water filtration, we have a guy who spent his career at a major oil company, and he did filtration. And so, like, you know, he knows that stuff. Or someone who knows 𝐒𝐾𝐃, helping on the 𝐒𝐾𝐃 stuff. So we want to make sure that within that group, there's at least one expert who's part of it. The individual, if there's 5 or 6 people, we don't have 5 or 6 people contacting the CEO directly. We get together, we have joint sessions with the CEO. When the pitches to us are very short, it's a 10-minute pitch and 5-minute Q&A. So you can only get a taste of the company. So usually it involves a detailed pitch by the team, by the startup team, and you know, that's sort of the first step. Then we'll go into a data room. We do have a set of key questions and an outline of things that we think are important, and that helps investors structure their thoughts, right? You know, the specific answers are very different, you know, and the strengths of different companies are very different. But by having some degree of structure, it enables you to make sure you're thinking about the right things, even if it's just a few bullets in a certain area.
Yeah, I see. Is there any example on the cases that you like fail to get the angel involved in the process? Is there any chance that it happened?
Back in the day when Wikipedia was starting out, I got to speak to some of the people at Wikipedia about what it actually took to make Wikipedia happen. And if people talk about crowdsourcing of ideas, really it was a very, very small portion of the total Wikipedia audience that was contributing at all. And of those, you know, 80-20, 90-10 rule kind of a thing, only a small number were actively contributing. So what happens for us in the group, and I think it happens in a lot of angel groups, is there are a number of people who are really committed and have the time to spend doing this and are curious and really want to learn. And there are others in the group who have less bandwidth or less expertise and are willing to listen more to other people's opinions than dive into the details themselves. So it's a mix. So it does tend to be a relatively small number of people who drive forward a lot of the work, and then sort of solicit questions and solicit opinions. And you know, if you have a list of, you go out to the group, a list of questions, maybe somebody starts with 5 and 3 or 4 other questions get added to it. And then you know, that's what makes its way into the CEO.
I see. One question about the horizon, actually, in terms of, for example, the fund horizon can be 10 years, 7 years, and they really aggressive in terms of get the deal money out, like they can cash out from the deal with the exit and stuff. Given that you are the angel group, do you like got some time like in your mind to from the day one you invest in the company and until what time you can exit? Do you estimate that, or anybody ask about that? Because for example, some of your member put the money in, and when can I get my money out? I think they got no question, right?
I think as an angel investor, you have to be ready to lose on a fair number of the investments that you make, and hope that a small, you know, the relatively, you know, that some of them do very well. And you know, that's classic angel investing. But it's, I'd say, compared to a fund, because angels go so early, there are less data points and more things that can go wrong. And so like there's one piece of the answer to your question, which is you never get it back, right?
Wow.
And I think there are some angel investors who go in saying, I'm only going to invest the money that I can afford to lose. And if that's your mindset going in, then there's less pressure to get it out potentially. Say, hey, if this becomes successful, great, but it's a little bit less important. So I think that's one difference of angel investing versus fund investing. Now, of course, people want returns, and they want returns both for the financial benefit and also so they can then get another shot and reinvest the money. So there are also investors. We do have one or two people who did well in crypto, for example, and they accumulated some money to invest by making crypto investments. So if you have an exit, then that's more money that you feel comfortable putting into riskier ideas. So people know that it's long term. In this part of the world, it can easily be 7 to 10 years before a company goes public. So I think you have to, or has an exit event. So I think you have to say, hey, this is tied up for a decade. There are some people who, if they're American, they have a retirement account like an IRA, and invest from that because those are illiquid assets. So maybe there's a way to use those sorts of illiquid assets for these kinds of investments. But you do have to say this is illiquid. It's going to be a long time, and the earlier you go, the longer it is.
I see. Talking about the region that you invest in, like Singapore or around the Southeast Asia, or you may got access to America or Europe, but why you choose this area, and why the group like HSA people got what thing in commons that they choose this region. And if you can help me to understand more about what you have learned from the strains of entrepreneur from the countries around.
Yeah, interesting. Good question. So there's one very prosaic answer to the question, which is we're here. And we mostly live in Singapore or in Southeast Asia, and angel investing requires some degree of familiarity with what's going on in the environment of that angel investing. So the very simple answer is a lot of people who do private investing at this stage of companies want to invest in companies near them, so they have a much better feel on a day-to-day basis of what's going on. And they're also usually part of networks where they'll meet the entrepreneurs. So that's the sort of prosaic answer. The slightly more strategic answer to that question is, if you look at Southeast Asia's prospects, they're very strong economically. So GDP growth trends that have happened for the last 20 years are projected to continue. Population is large, young, entrepreneurial. The amount of tech entrepreneurship that has happened, compared to 10 years ago, there's a lot more, but compared to Silicon Valley, it's a lot less. So there's still a lot of runway here. So you've got demographics at your favor, you've got sort of economic tailwinds, you have a lot of opportunity because it's just more open space that hasn't yet been attacked. I also think that Southeast Asia, I read this recently, but I thought it was an interesting insight. If is going to be a place of some degree of geopolitical competition in the world, where different superpowers will be looking at extending their influence. And one of the ways they'll extend influence is with economic support. And that's another possible driver of economy in the area. And then I guess the last thing I'll say is that there's about the opportunity, the positive, and I'll throw a couple negatives out as well, but of the positives is that there are some unique problems in this part of the world and some unique structures in this part of the world. So for carbon sequestration and carbon trading models, as an example, there's a lot of rainforest across Southeast Asia that is either needs to be preserved or restored. and it's massively important for the world. So there's a very big opportunity there. There's also a place like Singapore has government regulations that can be very friendly. So with lab-grown meat, for example, there's no farm industry blocking the legislation to support lab-grown meat. So the government's able to create legislation without a big lobby fighting it in place, which then creates some opportunities. So there are some specific opportunities that you can find here in Southeast Asia because of the specific problems or the specific structures that you see here. So that's what I found. I also have found that that there are some negatives. So I was in tech before doing climate tech, and I've watched the growth of and invested in the growth of tech startups over the last 15 years here in Singapore. And it really wasn't until maybe 2012 to 2014, somewhere in that window, about 8 to 10 years ago, that tech investing and tech startups really began to take off in the region. And it's a country by country thing, depending. So at least, and the VC industry is really like a decade old. It's not completely true. There's some older companies, but it's a lot of growth in the last 10 years.
Yep.
What that means is that 10 years ago, there was not very many entrepreneurs. Now there are entrepreneurs who've actually been through multiple companies. Some have had exits. Some are taking their winnings from those exits and putting it back in the ecosystem. All that's happened in tech. It has not yet happened in climate tech. So I think the vibrancy of the tech market that you see has not yet completely spilled over to the climate tech market. I think it's coming, but and I actually see that as an opportunity for early stage investors. But at the moment, that means there's a little less to choose from in this region, and maybe less maturity to choose from than if you were investing in Europe or North America.
Yeah, I truly agree that the level of adoption in terms of climate tech in this area cannot compare to either Europe or America. And I would like to add one more ideas in terms of why we also choose Southeast Asia. I do think that this is the front line of the battle against climate change, because we got bad effect very much in terms of the climate change. We got the Philippines, always got the flooding and stuff. We got the Mekong Delta in Vietnam. We always got problem with the climate change. And so I do agree that because of that, we are the frontliner. We need to do more, and this is where we should put the capital in to have more entrepreneurs to get involved in this fight against climate change. Yeah. And talking about the countries, do you recognize the strengths and the weaknesses of the entrepreneurs based on the countries?
I think you can answer that question in aggregate, but not individually, right? I mean, a certain founder is a certain founder, and each of us as humans have our strengths and weaknesses, and it doesn't really matter what culture you're from. You'll have those. But if you look at, for example, talent mix, certainly in Vietnam, as an example, as you all know, there's fantastic software development talent, and in other countries in the region, there's much less density. So in the Philippines, there'd be much lower density of really highly trained, highly educated software developers than there are in certain parts of Vietnam, just as an example. So I think you do see characteristics like that. You also have different local needs and different levels of development. Right. So if you look at Singapore versus Thailand versus Indonesia, and e-commerce. So e-commerce tended to happen first in Singapore, then in Thailand, and then in Indonesia, and only now in places like the Philippines. So you see a sequencing by country of what kinds of models roll out when, and that has a spillover effect into like how many experienced entrepreneurs there are, how well trained they are, what they know. So I think those things matter as well, and then different interests in different places.
Yeah, yeah. I think the answer will lead to something that most of the entrepreneurs got in mind, which is how to scale up, and what to choose to do is based on the needs and based on where you are at, right? And then you can think of what kind of which country you can scale next. But I believe that Southeast Asian country need to stay at the whole to explore more and more market. Like Singapore, we can do something there, but anyway, we need scale to some other country. It seemed to be. Thanks very much. And I get to the question from the audiences. We got Frederick. If you still here, Frederick, would you like to open the camera and interact with us?
Yeah, I'm still here. Can you hear me?
Yeah, perfectly. Can we see you?
No, you cannot see me. My camera is running low. I prefer not to show my face.
Okay.
And I have background music behind me, so it's not very good for you. Okay, yeah, I have a quick question. Thanks more for sharing. My question was more about to know more besides the fund. Do you guys have any kind of mentor program or trainer program, or I mean, like besides the money, we often need some support in terms of what to do, because as startup creator, we are alone, we don't know everything, and sometimes I'm myself more looking for advice than money. So I'm just checking if you guys also have some kind of support like this.
Yeah, we do, and that's a key thing of what any angel network has to bring is some degree of support for the entrepreneurs. It's usually driven by the kind of angels that an angel group can bring together. I'll give you an example. One of my co-founders at ASA works as a senior leader at the IFC, the International Finance Corporation, part of the World Bank. We invested in a company that does a lot of operations in Africa. And this guy knows a lot of the people running the World Bank country level operations across Africa. They're his friends from his 20 or 30 year career there. So he's able to say, oh, yeah, I know what you're trying to accomplish in country X, and here's someone you can talk to. So those sorts of introductions are one level. Second is just pure strategic sparring. I personally enjoy sitting down with CEOs. Almost every startup CEO I've ever come across, including myself when I was a startup CEO, wants to do way more than their team actually can get done. And the process of figuring out which of your priorities to focus relatively more attention on is super hard. So I personally enjoy those conversations with founders. I'll sit down and go back and forth and kind of hold their feet to the fire too, saying, I disagree if I disagree. And at the end of the day, the CEO is the CEO. They need to make the decision. But that's another kind of support that we bring. Occasionally, another level is for funding. So one of the companies we're looking at is now raising its next round. And the CEO is very clear, saying, hey, do you know people at this list of 15 or 20 VCs, because these are the ones that we're targeting, and can you make introductions for us? So it's a different kind of an introduction. So I'd say strategic support, introductions of various sorts, follow-on fundraising, and to some degree deals, like if you're selling and someone's from a particular industry and they know people in your industry, they can help you a bit on the sales process. Recruiting is another area that I think recruiting and team structure are areas that I think angels who are interested in helping the company can help with. So that's the kind of things we do. We haven't formalized it as a program. Here's the range of tools that we bring. We've talked about formalizing it a bit, but it's relatively informal, but it's an important part of what we do.
Okay, thanks, Mark. And I have just one other question related to this. Do you also connect sometimes some entrepreneur together, thinking like, hey, this guy have an idea, this one has a tech knowledge, let's bring them together to make something bold? Because currently in my situations, I have one, but I'm lacking the tech part, and I'm trying to see if there is any connection that business angel or even people can do to make it work together, to make it more efficient. I would say, to have two companies being together.
Yeah, and I think I personally do that pretty naturally, but not just for my investee companies. So I've screened a couple of companies recently that I thought would be interesting partners for each other, regardless of whether we end up investing in them. So when I talked to the second CEO, I said, "Oh, wow, you're doing that. I think, have you heard of this other company?" And it's like, "No." "Well, here's the name. You have a look, because I think this is directly relevant to what you're doing." So I make those connections. In terms of our portfolio, so far, the companies that we've invested in are not too directly close to each other. But we're looking at companies that, for example, there are a lot of people out there trying to do work in carbon markets, and there are a number of people out there trying to do nature-based solutions or various forms of carbon sequestration. Those two naturally go together. So if we invest in one and we invest in the other, then we would, of course, pull them together. Sometimes, interestingly, they talk to each other, and that's how we get some of our leads. Like, someone will like working with us, and they'll say, "Hey, we're presenting to ASA. Did you know about them?" And the other company will say, "No," but so they're talking to their customers. So it goes both ways.
Okay, thanks, Mark. It's good on my side. I will not take the floor too much. Thank you very much.
Thanks, Mark. Thanks, Frederick. I think absolutely what you try to provide in ASA, actually, I believe that is more like mentorship and connections, and really helpful, really helpful. And I must say that most of the time that we spend as a GP for a VC, that's the thing that we do, right? And try to connect people and try to get involved and give us advice. We cannot make decision on behalf of the CEO, but we are where the CEO can lean back and think about the whole strategy ahead. Yeah, so it's really great to organize like that. And we got one more question, like Nagatana Maduka from yeah, and can you open the camera and interact, please? The question is, are you still here? Sorry if I pronounce your name wrong. I'm really bad at this. Okay, or I can, on your behalf, read this question. Is does investing in battery tech consider green investment, in your opinion, Mark?
In my personal opinion, yes. So I would put that in the bucket of energy transition. So if it's enabling people to stop using internal combustion engines or coal power generation, whether it's battery for like an electric vehicle or battery for storage for the grid, those kinds of things I definitely see as relevant. I personally see as very relevant.
To expand more about this situation, there's some cases when we invest in the sustainability field, we when we do the investment, we truly know that the startup really want to bring sustainability, but then on the way they operate, we recognize that actually when they operate, the level of sustainability may be lower. They may try to increase some sustainability somewhere, but then decrease the sustainability elsewhere. So what do you think we should do in terms of that? I think it's happened, quite a lot, because we view most of the thing on assumption.
Yeah, there have been studies that Tesla, for example, has had a net worse environmental impact until relatively recently than it's had gain. Right? If you look at the if you look at some of the problems caused with mining the lithium or whatever else goes into the cars, if you look at the whole carbon footprint of the manufacturing, the carbon footprint of the materials in the car. They actually have to drive quite a while before an electric car is actually net environmentally positive. And as a company, also, it takes a while to get there for them. So I think there's a reasonable argument to say, hey, some of these companies are not, even though they seem green, are not as green as you might think they are. That's a fair point. The flip side is I just saw in the news that California has legislated all electric vehicles by 2035. And that means the kind of scale is going to get to a massive scale where this really will have a big difference on a net positive. But it won't be total gain. It'll be gain minus a loss to get to that net positive. And then finally, kind of a little bit more to your specific point, there are people who might be doing battery development, but doing it in a way that's causing a lot of pollution or causing other environmental damage as part of that development. And so if we looked at that and saw that, it's like, okay, I like the idea of battery, but I don't want to invest in this particular company.
Yeah, I see. And there's a lot of things that we build on assumption, and it's turned to be the wrong thing. And at that point of time, I think when we understand, we can somehow involve in the operation of company and make it better. I do believe that. So anyway, the capital can be flow into anywhere, but to sustainability things is give it more chance. Yes, it's just my idea. And we got now from Lutman Sidimatale. So can you open the camera and interact with us? The very recent questions here. Lutman, you still here? Oh, it seemed that you cannot open it, right? Okay, I will read it on your behalf. He has always think only hardware or alternative energy can fix the climate problem. How could the availability of technology and data have to turn a corner of sustainable investment in your perspective, Mark?
Yeah, well, let me give you a couple of examples of some companies I'm seeing that are very much software companies that I think have a positive impact. I agree with the premise that at the end of the day, if what you're trying to do is change a physical system, then you have to impact that physical system, which implies a physical thing that happens. But then when you start looking at what companies can do to help, software can play a role. So a very common example that a lot of you probably have come across is for carbon sequestration in forests. If you want to be able to measure how much carbon is being captured by that forest, one powerful way to do that is with satellite technology. So you can just take Google Earth pictures or any other sort of satellite feed, drill down to the level of that forest and say, hey, whoa, last week this was forest, this week it's a clearing, at its most simple level. But you might also be able to get more specific than that and say, hey, this part of the forest has this kind of a tree and that kind of a tree, and the percentage changes. And a lot of that can be done by using image recognition and then analysis software to figure out how to do that economically and at scale. And if you can find ways to do that well, that's a much cheaper way of verifying the efficacy of a carbon capture project than by going in and measuring the individual trees and having 100 people go through a forest once every 6 months or once every year. You also can capture things faster when something goes wrong. So that's one example. Another example is a company we invested in that's trying to reduce food waste. An amazing portion of the carbon footprint of our food is all the waste that happens. Something like, you hear different estimates, but around a third of the food that's grown gets wasted. And a lot of that actually happens in the farm or in the transportation system. So we invested in a company that monitors a number of things using IoT devices and can measure the water, the temperature, the sunlight, some chemical analysis of the soil, transmit that back to a receiver, and then understand that this part of the farm, maybe it's north facing, is not ready to harvest, but the south facing is ready to harvest, or the other way around. And it can be very specific about what to go after when. In the previous world, you would have just harvested all at the same time. Some would have been too green, some would have been rotten. And this way you can be much more specific and send your farm workers to a specific place and harvest it at the appropriate time and reduce waste. So yes, there's a physical activity that happens, but it's happening in a more intelligent way because you use software and maybe AI and maybe some data, some IoT technology to bring that all together. So those are the kinds of examples of non-physical things that at the end of the day have a positive physical impact.
Yeah, I do agree, and it's like when we invest in given that the fight against the climate change is very limited in terms of the timeline, we need to do it faster because I think we got less than 100 years to get some more impact in this. So with software, with non-physical things, is easier for us to scale, right? And so with the scale up things, where I think that the fight against the climate change will be more effectively, maybe. Yeah. Any more question? Or I think we kind of run out of time. And thank you, Mark, very much for the keynote and also brilliant questions. I think the question brings out a lot of example, and we really eager to work with you in the near future, deeply into what you do and what kind of thing we can support. And about the guys, thank you very much for joining us. It's great to have a photo together. And so please, if you can open your camera, please let us take a photo.
Honestly, I can't. I'm at the beach with my kids, so it will not look good on the photo, to be fully honest.
Yeah, sure.
But thanks you guys for the session. Very insightful.
Thank you, Patrick. Yeah. Come on, guys. Okay, let me do it. Now, can you take care of this section, please?
Hi everyone. Okay. 1, 2, cheese. Cheese. Thank you.
Thanks, everyone. Thanks, Mark. Catch up soon.
All right. Have a great afternoon.
Yeah, thank you.
Thank you, guys.
Bye.
Bye.
Bye.